AMD stock is down over 50% from its 52-week high. And in the past year, AMD has completely underperformed the S&P 500 and the Qs. But I'm going to make a few predictions. First, I believe the market doesn't understand AMD and is not pricing it correctly. Also, within the next few years, I do believe AMD is going to completely demolish the overall market. Now, in today's episode, what I want to do is the following. Take a closer look at some of the bullish takes for AMD. We're going to look at some of their growth in the AI market and growth in some of their other core products as well. More importantly, we're going to take a closer look at some financial data and some things that we've heard in previous earnings calls, in previous analyst reports, and the list goes on and on. So let's get started.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so the first thing I want to take a closer look is just not more of a price target, but what's something I consider as a healthy valuation or healthy cost for AMD based on historical levels. So right now, based on this data, the 10-year average for the US semiconductor industry is about 29.3 price to earnings ratio. Now, I'm also going to take a closer look at upcoming earnings per share estimates for AMD. So for current fiscal year, it's about $4.70. And for the next fiscal year, it's about $6.30. And the next fiscal year is a little bit less than 24 months from now. Now, again, these are not price targets, but more of what I see can be an average valuation for AMD just based on historical PE averages. Now, we looked at for this fiscal year, it's expected to be roughly $4.70, and that would kind of equate to an average valuation of $136. Again, these are not what I would consider price targets, but more what I would consider healthy average valuations for AMD. And now, if that is expected to be by the end of this fiscal year, this average valuation, then at the current prices of AMD sitting at about $100, let's just take a closer look at AMD right now. That represents over a 37% year-over-year growth from these levels. Now, this is much faster than kind of the overall market, right? The overall market on average grows about 10%. Now, if we kind of take a closer look at those next fiscal year, which is $6.30, that equates to a price target of $182. Now, remember, these earnings per shares are completely based on analyst estimations. I believe for AMD, this is my bullish take, the market and the analysts that are following AMD are a little bit too bearish, and I believe AMD can completely outperform these estimates. And we're going to see that by the end of this fiscal year, even if the first half starts a little bit weaker than expected. Before we go any further, if you want to get constant semiconductor news outside of just the popular companies, feel free to check out my free daily semiconductor newsletter, whatthechip.com. The link is down below. Most recently, we talked about NVIDIA's H20 chips in China. We talked about Intel's new CEO. We talked about Oracle's past earnings. So there's a lot of free information if you want to get to know the overall industry. Now, AMD is a big player here in the AI space. They do have kind of a CPU that helps with a lot of AI servers. They also have their more known MI300, which is their AI accelerator. And even though this is not selling compared to like the NVIDIA levels, it is still making money, and we'll look at that. The company's also improving their overall software innovations for their AI accelerators, which is very crucial. A quick background on AMD's MI300. The MI300 was ramped up pretty quickly, and in the first year exceeded $5 billion. And obviously, these are not NVIDIA numbers. NVIDIA is doing a lot more, but regardless, $5 billion is a huge revenue segment for AMD. The main reason is they do have two main customers right now, Microsoft and Meta, that are using the MI300 at scale for a lot of their solutions. Microsoft is using it for OpenAI's GPT-4 solutions, and Meta is using it for a lot of their Llama solutions as well. Now, obviously, just like any other player in the AI space, AMD is innovating. They introduced the MI325 in late 2024, and they were expected to release the MI350 later in the late of 2025. But because of the strong excitement that they're seeing it, they're actually pulling it closer to mid 2025. And this could be a major catalyst for AMT. Now, one great thing is at a recent earnings call from Oracle that happened on March 10th of this year, Oracle mentioned that in quarter three, they signed a multi-billion-dollar contract with AMD to build a cluster of 30,000 of their latest MI350 GPUs. So we saw AMD pull up their MI350 ahead of schedule, and we also saw a big customer announce a massive training cluster of this system. Now, in forms of performance and some of the perks of the MI350 compared to previous versions is you can see up to 35 times performance for inference. You can also see more appetite for training capabilities, and you can have the ability to create tens of thousands of units of training clusters. And this is what we actually saw just Oracle announced a few weeks ago, right? That 30,000 GPU cluster. So they are pretty excited to pull this product available to mid-year versus late of this year, as that is going to get a lot of customers excited for AMD solutions. Now, the next generation is going to be the MI400, and the MI400 is expected to come out late 2026, so about 2 years from now, give or take a few months. And the great strength about that is they believe they're going to continue to increase their competitiveness, as this will be an AI GPU that would able to compete at the rack level system and levels to continue to build massive cluster of GPUs. Now, one great thing about the data center market and data center GPUs just growing at fast levels is data centers tends to be margin accretive. So AMD's gross margins were already in the above 50%. And I believe that's pretty strong for a hardware company that is kind of entering the software space. And if we continue to see data center being their faster growth driver, I do believe we're going to get those gross margins even higher. And we're going to start to see those results in the second half of this year. Now, the next cool thing that I believe could help AMD grow even further is their acquisition that they announced of CT System in August of 2024. And right now we are getting more news coming out throughout the past weeks that a lot of the regulators of different countries are giving the okay for this acquisition. Now, a top level overview of this system is AMD provides a lot of chips. They provide CPUs, they provide GPUs, they have networking solutions, or if not, they are in some form of group that allows or improves the networking solution, and they have a software solution. One thing that AMD lacks is, well, a few things. They lack improvements in software, but they're already doing that. And they also lack the ability to kind of think of designing these massive AI computers, these massive AI clusters. And CT System is actually a player that can help there. So I believe this acquisition is going to be one of the biggest things that happens for AMD. And while this gets approved, the teams are already working on integrating and working together to kind of provide solutions for the MI350 and for the MI400, mainly on the MI400. But as clusters are getting bigger, CT System is a need for AMD to continue to grow in the AI space. Now, AMD is also very competitive in the server CPU space. At a recent conference, we learned that in 2024, they gained about 5 or 6 points of server share. And they think they're very confident. They're actually very confident about server share gains to come in 2025 as they move forward. And obviously, they have a lot of competition here. They have Intel and they also have ARM-based CPUs. But overall, they're gaining market share, and that is very bullish for both their top and bottom line. As, like I mentioned, data center solutions are very, very margin accretive. Now, another market that AMD is kind of lagging right now is the FPGA. And the FPGA has been slow and has been recovering even slower than expected. But during this kind of down cycle, they've actually gotten tremendous design wins because of their team's focus and executions. If you kind of talk about the design wins for 2024, they had about $14 billion of design win, which is like 25% increase year over year. And this will help them in the long term when the market fully recovers. Now, also, we have heard from AMD that these past few quarters, they've had a couple of businesses that were headwinds that masked on the top line. And this is one of the reasons AMD's revenue hasn't been a massive grower. Some really exciting process in sort of their core franchise, and they are confident that those headwinds are behind them. So those will quickly turn into tailwinds, and they're gonna see. I do believe investors are gonna see very closely and very quickly how this company is gonna start growing revenues at some nice levels in the upcoming quarters. Now, great thing in my opinion about these market cycles is when a market is in an over inventory correction, revenue drops down dramatically. But more importantly, companies try to reduce their inventory as soon as possible. And when they do that, operating incomes and overall margins tend to drop because these companies are trying to sell everything at lower cost. They have massive sales, and that really impacts operating income. And now that kind of these markets are kind of seeing more of a stability, we kind of see a huge improvements in things like operating income. A perfect example is here, the client, which is kind of consumer CPUs revenue quarter over quarter was up 23%, but operating income was up 62%. Year over year, revenue was up 58%, but operating income was up over 700%. And the main reason is you're no longer having that pricing war. So not only are we expected to see revenues grow at rapid levels, but I'm going to tell you that I believe operating income and earnings per share are actually going to grow at levels faster than revenue. The company also has a very strong balance sheet. I mean, $5 billion in cash and short-term investments, about $1.8 billion in total debt, and they are positive in free cash flow. So for me, AMD is almost a no-brainer. The reason I say almost is no stock in my portfolio is ever a no-brainer. Not even my number one stock, NVIDIA. The reason being is the market is always weird, and I personally am not the type to risk it all in one company. So that's all I had for today's episode, and I try to bring more information than just random metric inspections and just looking at financial numbers. So hopefully the episode was valuable to you, the viewers. If it was, please make sure to hit the thumbs up and hit the subscribe button. And again, this is a stock that I believe will completely outperform the market as a long-term investor and has a lot of growth opportunities, not just in AI, but we saw kind of the CPU space. We saw also the client space. We also saw the embedded space. So let me know in the comments below, what are your thoughts on AMD, and are you buying, or do you believe this is no longer going anywhere anymore?